Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that responsive buyers were active near yesterday's low and pushed ES back up into the 98 to 2100 resistance zone from yesterday, which marks the previous day's high as well as the all-time high at 2100. Now that all-time high at 2100 is rollover adjusted, just to be clear. But for the S&P futures, that is the rollover adjusted all-time high, and it is a major area of resistance. Now, heading into the open, we know that the buyers have been dominant. The recent trend has been pointing to the upside, but 98 to 2100 is valid resistance until broken. At the same time, we are seeing a bit of a divergence with the other markets where Nasdaq and Russell are not really participating in the upside move to the extent that we're seeing in the S&P. Now, it doesn't mean that S&P can't break out and lead the other markets and then pull those markets with it. But in order for ES to break out above 98 to 2100, we are going to have to see some pretty decent upside momentum on price as well as the NYSE tick, and we are going to have to start seeing participation from the other markets. So in the event that Nasdaq and Russell can't really break out above their overnight highs, it's going to be very difficult for ES to actually sustain any kind of breakout above 98 to 2100. So this is still a major area, and it is going to be resistance until broken. The way the market's setting up, just looking at the S&P, it seems like it's setting up for an eventual break. But until that happens, and until we see some decent upside momentum and the other markets catching up and participating, we're still going to view that as strong resistance and be very careful on the long side up there. And at the same time, if we are seeing a lack of strength near 98 to 2100 and a lack of participation from the other markets, then that could still be a valid short setup. Looking for a move back down to 91.93 and 84.75 to 86.75. Now, the 91 to 93 area is the aggressive area of support, pre-market support. If the market is truly strong, then that's the zone that has potential to hold. And if there's a lack of strength, then of course we can come down and retest 84.75 to 86.75, which is a very key spot at this point. You can see on the chart it essentially marks the current 2-day balance area low. So this is a key inflection point for buyers, and a break below 84.75 to 86.75 can lead to at least a short-term shift in control from the buy side to the sell side. So in the event that ES goes down and breaks initial support, we'll have to be cautious at the 79.75 to 81.75 zone, since it's directly underneath. And if we are selling off on a lot of downside momentum and the other markets perhaps even making new lows, then this zone may not hold, right? The 79.75 to 81.75 zone may not provide enough reward to risk to justify a trade. 74.5 to 76.5 is still a decent spot for responsive buyers to be active, and same goes for the zones below it, because at that point you'd be getting quite exhausted and start hitting a range extreme. So 74.5 to 76.5 in the zones below can still provide a reaction, or depending on how the market approaches it, even a reversal. But in the event that we break initial support, we'll have to exercise caution at 79.75 to 81.75. So that's really how the current market context is set up. Recent trend to the upside, buyers more dominant, but heading into major resistance. And now, in order to break out above this major resistance, we need to see sustained upside momentum and participation from the other markets, where at least they start catching up. They're obviously not going to be at the same level or similar level as the S&P, but as long as they're not going the other way and they at least begin to catch up to the S&P, that could still be enough, and ES can lead to the upside. So those are things we're going to be looking at and watching off the open. We want to see a strong advanced decline line trending higher to justify and support a upside breakout if it's going to take place. And if we're not seeing that, then you want to be very, very cautious on the long side up here. And if we start seeing just clear signs showing a lack of strength or even outright weakness, then 98 to 2100 can still be a short setup because it is a larger time frame area of resistance. So even though we're coming back into it for a second or third time, it doesn't invalidate the zone. It's still a valid area until broken. Our short-term bias continues to be neutral because of the way the market's set up. So it's really going to be about assessing the underlying environment in real time and then determining whether there is enough strength to break or whether we're not seeing enough strength, which can leave us in this recent balance and possibly even end up breaking the balance lows at 84.75 to 86.75. So those are our main ideas. Let's see how this plays out, and we'll take it from there.